Good morning. It's Tuesday, April 30th, and I am going to pack in. Just sit down, put your seatbelts on, and get ready for a ride because this is my last show until I'm going hiking in Utah, starting at, I think I leave at 5 a.m. tomorrow. So Wednesday, Thursday, Friday, I know we've got a lot of earnings. I know there's a lot of stuff coming out. If you want to track the earnings, the best place for me is earningshub.com. And I don't get paid to say this. I'm not an affiliate of theirs. I am on Savvy Trader, and I've got one of the top portfolios on Savvy Trader. So I do have some qualifications, but Earnings Hub, I just like the layout. And if you want to know what's trading, you've got a ton. Dash tomorrow, Qualcomm tomorrow. Today you've got Amazon, AMD, StarBucks, SMCI, which I'm big into. I've got a few shares of pins. You got Powell, which is an alpha pick. Tomorrow morning you have MasterCard, Pfizer, ADP, CVS. You've got Wingstop. And I looked at that one. You got Sprouts Farmers Market, which we've had a social request on. The big one for me is Apple on Thursday. I'm going to be out hiking. So I'm not trading it. I'm not doing it, but I got a ton of stories to go over. But yeah, yesterday there was some news that moved the market. And the news was that the Fed's going to borrow $41 billion, which is more than expected next quarter. So what did the Qs do yesterday? Well, we talked about it. 434 was the resistance level that we really need to get over. Well, let's draw that 434. Did we get over it? No, you didn't get over it. You got the high yesterday in the afternoon candle, 433. The high in the morning candle, 433. So we can go over to Seeking Alpha. Let's look at Seeking Alpha. And we can go to the Qs. And you just look at the Qs and you say, okay, what's the range here? The day range. You don't have to be a premium member to get this stuff on Seeking Alpha. I just like their tools. I like their layout. It's nice and easy to do. There's the day range, 429 to 43.76. We didn't get over 434. In pre-market, we're in the Qs. We're trading at 431. We're down 0.37. There was an interesting note from Morgan Stanley. We expect inflation data to reverse to the downside surprises in April. Several data series indicate a rapid deceleration in rents. Remember, it was rents that was one of the biggest contributors to inflation. Financial services inflation is linked with the stock market returns, and the reversal in the SPX is April will likely push the volatile component of inflation indices down. Continued China deflation should keep U.S. households in broad deflation. That's a bullish note. Now, comments are find me one renter whose lease renewal was reduced. Yeah, it's not reduced. It's just they're not reducing rates. Rents aren't going down. They're just slowing. They're not going up as fast as they did. So that's the key. This was an interesting note from Trendspider. With over 50% of NASDAQ 100 constituents record 14-day lows, it often signals exhaustion and marks a new local bottom for QQQ. The latest occurrence was April 19th. That means we could be going for another run. That could mean that we go for another run. It could mean another bounce. April 19th was right here. And you saw, the afternoon candle. That was the low. Could be a bounce. We're getting to that 50-day. 436 is the 50-day. So you want to check your levels. You want to take a look at this stuff. It's important. Apple. Now Apple's in reporting Thursday. Obviously, it's my biggest position, largest position. Apple is a hold in the quant. It's a hold based on valuation. This report, Apple quietly builds AI dream team, but the final product remains a mystery. I don't think you're going to get anything about Apple's AI on this earnings. I think 173, which is trading at right now, is a fair price for Apple. We can go over to earningshub.com. And we can take a look at what's expected. You can take a look at even the AI stuff, the AI summary, once it's posted. There's the Q1 2024 earnings. This is the previous earnings. And they have ChatGPT just summarize it. It's really, really good. They're expected $1.40. Their expected revenue, $84 billion. That is down from what they reported last time. And again, that's reduced rates. So if they do this and they guide a little higher, or they say something about AI, WDC, if they say anything, I think you see a little pop in this stock. I don't think that you get back above 200. I think you maybe get to 185. The RSI at 61. It's not coming down quickly. You're just hovering around this this oscillator on the MACD. If we look at the weekly on Apple, where are you? You're just kind of hovering around. But I pointed it out before. In the past few years, 4 or 5 years, every time you've gotten below the 50-day, you've bounced up above it. So it's presented a buy opportunity in the long run. This is a little different. The valuation on this one comes into play. We've got some issues. Tony Sacconaghi of Bernstein, he said China was more cyclical and that Apple is having a Buffett moment where you buy when others are fearful. What's interesting is Bernstein has been on the right side of Tesla a lot. And Tony has been really, really good with Tesla. Part of this is they don't take investment banking income. So when he says buy, remember, I said it. This was the upgrade. It's more significant than what I said yesterday. He's had a hold on this stock since 2018. He moved 2018. He said, hey, this stock, it's overvalued. You should hold it. So look at 2018 where it dipped down. He didn't say buy at 40. So he's been on the wrong side of this one for quite a long time, but he's saying buy now. And he says it's cheaper than it has historically been. So what did I do? I went back and I looked at the 6 months of Apple. This is their PE, okay? This is it going down. Let's look at the 3 years of the PE going down. Is it going to pull up? Because I did have this one preloaded. Yeah, there we go. Look at the 3 years. You can go back. You were at 30. Today your PE is 27. So you're down historically. Let's look at 5 years because you're up from 5 years ago, which was 2019. You're up. The PE is up. But historically, you're not expensive. It's not the most expensive that it's been. You can see back here in 2020 when we were trading at 38, 40, you even hit 40 on the PE. So take a look at this. And I wanted to point that out. He says it's cheap. And it's cheap for a reason. But hey, buy when others are fearful. So if you don't have it, I would say, hey, maybe look into it. Microsoft or Meta? I made my bet on Microsoft. I bought big. Brad Gerstner, who's the head of Alt Capital, I really like his analysis. He's been pounding the table on Meta. He is a big Meta shareholder. I think he owns Microsoft as well, but not as much as Meta. Llama 3 is a direct replacement of OpenAI, more than 10 times cheaper than ChatGPT-4 with similar performance. This is a podcast. Go and listen to it. It's interesting. Which one do you want to pick as far as the AI winner? Mark Zuckerberg, who's going to run this stuff for free and keep the cost down, or Microsoft, who's going to monetize it with OpenAI? I don't know. I mean, I've made my bet with Microsoft. I think Microsoft takes it. Meta was down yesterday. We can take a look at the chart of Meta. The chart of Meta, if you're telling me that they're going to win AI, this is a buy. This is a buy right now. Algorithm has you out. Now, the RSI down here at 26, the MACD super low. You've got this gap here between 447 and 488. So you've got a gap to fill on the upside. You're down just below the 200-day. You haven't gone below the 200-day for a very long time in this stock. This is the 4-hour chart. And again, the algorithm doesn't have you in. But let's look at the weekly. The weekly looks a little bit stronger. It looks like there might be still more downside. The RSI is down at 50. It's coming off 86. And you've got the MACD crossing down. I think you do have this support at 387. I think if you don't have any stock in this, if you don't own any Meta, I think if you get below 400, you absolutely add to this stock. I think the closer you get to 400, I think you pull the trigger. I bought there. Microsoft has been showing 400 has been the stock price that it's at. Right there. I bought at 402. I like this using the 200-day as its support level. I don't think we're going down, even though the 50-day is still moving down. If you look at the weekly, I think we still have some more downside here. But I bought for the long term. Again, your RSI, same thing as Meta. RSI is at 50. The MACD's way up there. So Microsoft or Meta, you probably should take your pick on that one, which one you want to do. And I think that podcast was really good. Now, Tesla. Trendspider came out. These oversold bounces on Tesla have been rinse and repeat for over a year now. Enter when the daily RSI closes below 30. Exit when it's up 15% or down 5%. Simple yet effective. If you want this strategy and you're a Trendspider subscriber, go to the newsletter because I'll have it in there today. This is a link. This is a link from Trendspider. They have this strategy. You import the strategy. You can run this strategy if you want. If you don't have Trendspider, then go to my link tree, which is right here, and you can click that top link. It will take you to Trendspider right here. And it's you save over $1,000 with my link. Then you're going to email me. I'll email you my 4-hour algorithm. But what's great about Trendspider is when you get a strategy like this from Trendspider that is back tested and shows you that it works, you can just import it and use it. And I thought that this was one of the reasons why I got Trendspider is I love their strategy stuff. And they back test everything. So you want to look at it. Tesla, meanwhile, Tesla, we can look at this. Tesla is laying off a bunch of people. So supercharger team laid off. I don't know why. Yesterday was just a legendary day for Tesla. We can look at the chart. It is down 3% today. I think I wanted to sell this up above 190. I didn't do it. I thought maybe we were on our way to break that 200-day. We used the 200-day as its resistance level. So I think we start to see this one come back down. Remember, a lot of this stuff is not actual earnings. It's not actual products. It's hype. So this one may be up and down. I've said it before. This is upper left to lower right, which is not a good chart that you want to own. You want to trade this one. I finally got my parents to say, yes, you can start to trade it. So I'm going to trade it. Look at the RSI. The RSI yesterday closed at 73. It is coming off 75. It was overbought. Now, TSLT, which was the buy, TSLT was up, let's see, it was up 30% yesterday. 30%. This is 2 times long daily Tesla. Well, it was up Tesla was up, I guess, 4 or 5%. TSLT, same thing. You've got upper left to lower right chart process. You don't want to get into this one. But this was a great buy here at $8.76, which the algorithm got you in on April 24th, and it's made you money. So again, you want to take a look at this stuff. If you don't have a strategy, you should absolutely do it. Now, Tesla is getting some good news from Gene Munster. He says all signs point to FSD will eventually be available in China, in the largest EV market in the world. Timing is unknown. I was shocked to hear the news given the progress that Baidu's Apollo. Bottom line, Musk is on the right track by advancing FSD as a competitive advantage. This is huge. Car makers have always, it's been the golden chalice that they've been after. Monthly reoccurring revenue that they can charge to somebody who buys a car versus a one-time purchase. Remember, your dealership model is not Fords and GMs and Toyotas getting monthly service revenue. They do sell the parts, the OEM parts, but they get monthly service revenue, and that's the golden grail. So I think it's important to notice that as far as Tesla goes, but you don't have it yet. You don't have it yet. It's great, but you don't have it yet. I think Gene Munster is full on there. Morgan Stanley, following Meta, Microsoft, and Google reports last week, our cloud CapEx tracker now points to 44% year-over-year growth in 2024. They used to say that the previous reading was 26% growth. $50 billion of spend, the strongest cloud CapEx supercycle since 2018. That's important. That's from Morgan Stanley. You want to do that because what's in the cloud? You have all of your AI stuff. So it's an AI market. You want to take a look at that. What are the top 50 stocks with the highest sensitivity to interest rate changes? I like this. Royal Caribbean and Alpha Pick. I like that one. Norwegian Cruise Line. Yeah, rate sensitivity 91%. Consumer staples, energy, Halliburton, real estate, Boston Properties. I like how they break it down by sector. These are sensitivity to interest rates. So higher for longer. What's ironic, XLK, SMCI is at the top. Rate sensitivity rank 99%. Higher for longer doesn't do well for Supermicro. So speaking of NVIDIA, this 60 Minutes interview, I thought it was really, really good. They didn't outline anything. They just highlighted Jensen Huang and what he did, and the Denny's where he started NVIDIA with two of his friends. And so, I think it's great. I like this interview. I thought it was really, really good. I thought it was good. Now, another podcast that I think you should listen to is this one. This is a new ETF that they're launching. CPSM is the symbol. This is against the S&P 500. It provides you 100% downside protection. So it caps you, so far it's brand new, it caps you about 9% gain, so you don't make the huge runs that you do, but it protects you 100% against the downside. It's pretty incredible. Listen to this podcast. Bob Pisani really does a good job of doing that. I thought this was a great interview. But it provides, this is like your TQQQ, it's your triple levered kind of stuff. It uses options to try and protect you. And the logic is it will protect you 100%. Who's it for? It's for the Walters of the world who want REITs for income, who want the 20% income, but they want to protect their downside. This is where that ETF comes in. Now, it hasn't been proven. It's still brand new. They have a NASDAQ one coming out in June. I thought this was interesting. I think you should listen to it. And how do you get all this? Well, you sign up for the Daily Stock Pick newsletter. It's free during the week. It is 100% free. I only charge on the weekends. And you get all of the content like this. Everything that I go over in this podcast is all the links are in the newsletter. So make sure you're signed up. Now, Steve Kress, who is in charge of Seeking Alpha's quant, who I totally respect, 30 years that, Seeking Alpha bought his quant stuff. He writes articles. He wrote the top 5 commodity ETFs based on the quant. I thought this was good. So if you're interested in that stuff, I think you should look at that. Now, I wrote a note, and one of the stocks that I noticed that moved yesterday was Shopify. Up 1.61%. It's given a little bit back. It started its move. Now I wanted to point this out because it is one that I know a few people have quite a bit invested in because I've said it's an $80 stock. I still continue to think it's an $80 stock. Their earnings are coming up here on May 7th. If you bought at 71 down here, we do have confirmation. It's starting to move up. The 50-day is still moving negative, so you don't have the ultimate. You just had the death cross. I do think we move to be more patient. I do think that we get back here to cover this gap. It all goes all the way to 88. But we've seen how that $84, $85 provides some resistance. I think it gets above 80. Again, if you look at the weekly, and we've talked about this, the weekly, it's not super weak, not super strong, but that 200-day right there at 81 provides the resistance. On the weekly, your 50 days still moving positive. So yes, you've come off that $85 range, you got to $90 here. You're coming off that based on the last earnings. It's been going down. I think you see stronger stuff. So let's go over some of the earnings. If we go over to the earnings hub, some of the earnings that we've seen, NXP, Let's look up NXP. NXP is a auto semiconductor. So they're basically what is it? I think it's NXP. Hold on, I gotta look it up. That's not NXP. Let's look up NXP. Sorry, NXP. Yeah, NXP Semiconductors. That's not NXP. Yeah, NXPI. There it is. NXPI. I put it down. I missed the I because it's called NXP. They killed it. They beat by 2%. Missed the revenue, but the results may indicate a soft landing. And you can look at this article. NXP Semiconductor results guidance indicates soft landing is happening, and the reason they're an auto semiconductor. So conversely, peers such as Texas Instrument, Analog Devices, Microanalysis trade between 38 and 41 times. So it's trading 20 times its future earnings. NXPI, but I'm not investing in this one. I thought it was interesting. If we look at the chart on NXPI, I like it because it's a semiconductor and it's an auto semiconductor. And the auto business says a lot about the consumer. And you can see we gapped up here. This one is up, let's see, 4.22%. And you're coming up to your all-time highs here at 263. That's where you're going. And we can look at this weekly chart. Look, it's still moving. And that's an auto semiconductor. I thought that was interesting. MicroStrategy reported, and they had a bad quarter. Stock dips after turning in wider than expected Q1. MicroStrategy down at 1206, it looks like, about $1,200. It's been a bit of a, remember, this is a leveraged ETF on Bitcoin. That's what it is. And Bitcoin would dip down to about, I think, 61,000 today. So it was dipping down. PayPal, I was completely wrong. PayPal beat. Let's go over to Earnings Hub because we can look at PayPal. Let's go to where is PayPal? I know it's in here. There it is. We can look at PayPal. They missed by 5%, but their revenues beat, and that's the key. They missed earnings per share, but their revenue beat by almost 10%. Now, the stock was way up. Let's see if it's pulled back. I'm still not a huge believer in this one, but I know other people were. I think it's trading at 69. It was up at like 74. It's only up 4%. It was up at 74 in pre-market. I was wrong. I got out too early. I don't think that this provides you, oh my God, I've got to get into this because it's going back to all-time highs. No, I think you'll be lucky to get to that 74 or 75 on this print. I think you've got a longer turnaround in this one, and that's why I got out. But I was wrong. I think I sold it like 62, 63. I was wrong about that one. Their earnings are pretty positive. And the guidance, not horrible. So, but we are in an AI and GLP-1. Eli Lilly killed it. Eli Lilly absolutely killed it. Eli Lilly, 4% over earnings per share. They missed on expected revenues. You can read when the AI stuff comes out on their call. You can read about it. This one is up. What is it? I have this in the core portfolio. And I know I'm doing really well in the core portfolio on this one. This one's up 6%, 788. So do you want to buy this one? They said specifically, there's more gas in the tank for GLP-1. That's what they said. So you can see it's shooting up here. It is complete. The RSI today is at 70. It is coming off yesterday at 45. That's 733.35 right before earnings. That was a fantastic buy. You're soaring to 800. Now, do you want to get into this one? I don't know. I mean, my theory on this is if you want GLP-1 exposure, you get this one. I mean, it seemed expensive when I bought it back here in July at 440, 458. I bought it all-time highs. Seemed expensive, but I've doubled my money almost. I mean, that's the crazy part. It seemed expensive, but it actually wasn't. McDonald's. We can talk about McDonald's because McDonald's gave some pretty yawn. I mean, it was just ho-hum. Dips after the Middle East war impact sales. McDonald's, I'm not a huge fan of McDonald's being at these levels. At these high levels where it's really kind of traded at. I'm just not a fan. And you can see McDonald's is down, down 2%. It's just ho-hum. Do you want to get into this one? I don't think so. And the reason is the weekly, if you eat at McDonald's and you love McDonald's, I do love McDonald's. I don't eat there a lot. But if you eat at McDonald's, this might be one you want to get into. It's just the valuation is a little crazy. One I've talked about before, GE Healthcare. They slipped on the Q1 miss. And we can go over here to Earnings Hub and we can look at GE Healthcare. I'll type in the symbol, GEHC. And we can look at this one and how bad it is. It is down 10%. I would argue that you take a look at this one because I do think this one provides some pretty good opportunity. Remember, they beat by 10%. They beat by 10%. You can see how bad a miss this one was. I would do the 3-day wait on this one, but I would absolutely look to get into this one. This is one, this is MRIs. This is imaging technology. This is what you want. You make 32% in the algorithm. The algorithm got you in here at 86. Probably not a great buy. I would have said, hey, for this one, I'd probably wait. Again, it's healthcare. I'm not a huge believer in healthcare. You got a negative 50-day, positive 200-day. You're trading below that 200-day. Last time you dipped below that 200-day, boy, it provided some nice upside. I mean, look at that. Last time you had this death cross, and again, it was 2 earnings ago. You had that death cross right here at 79, traded all the way down to 66. And that's why I say I think you want to wait because I do think there's some volume shelves here at about 77 that you have to work through. But I do think that this one may provide some good upside. Now, their guidance was not good. Their guidance was really very bad. So take a look at that one. Marathon Petroleum, we talked about this one. This one beat. Marathon could just, it's giving back some of its gains. This is one of the MPC. This is one of the S&P 500 year-to-date winners. This one is, let's see. This one is down 2%. It's given back. 198. I think you'll be fine long-term with that 198. 194, you're even better. Where are we looking at? I think you might be looking at about 185 to really start a position, maybe 190. I don't think you're horrible. Again, you opened up at 194. Right now, you're trading at 195. So it's starting to get some back. It's energy. If you want a good energy stock that just reported earnings and killed it again, it's MPLX. And that's why I have it in the core portfolio. MPLX, when you take a look at, let's go over here. We'll go to FinViz. MPLX, it's the dividend. So the dividend estimate, 8.41%. Trailing 12 months, 7.75%. But look at this stock. This stock for year to date is up 14%. Over 1 year, you're up 20%. Plus you get that dividend. I mean, that is a stock you want to get. It's an energy, oil, and gas midstream. I've held this for a very long time. It is in the core portfolio. That's why I hold it in the core portfolio because it's just one of those energy stocks that continues to return its share to shareholders. So tonight's earnings, let's talk about it. AMD. This is the first bullish MACD cross for AMD. It's a daily chart on the daily chart since February. Is this a valid sign? Let's test it. And Trendspider tests this for you. In the last 3 years, buying a bull cross and exiting on a bear cross, just the MACD bull cross, bear cross, has returned 123% versus 85% buy and hold. So let's take a look at AMD in the 4-hour algorithm because I do own AMD and I own it in a very long-term portfolio. It's been a long-term buy of mine. The buy here was at 151. Now the algorithm makes you 30% over 2 years. Buying and holding makes you 83%. I have not traded this one. I have simply added to it. When it dipped below $100, I was adding to it. When it was up here at $200, I should have been trimming it back in March. Now you've got the death cross coming. Do you want to buy this one on the MACD cross up or do you want to play protection with the death cross coming? That's the danger of charts. So let's take a look at AMD, earnings preview, focus, PC, AI. If we take a look at AMD ratings in the quant, it's a hold. Well, why is it a hold? We can take a look at this. It's a hold on valuation. Simple as that. The valuation has it as a hold. And it's been a hold, not for very long. It was a buy during this entire period. On its way down, it was a strong buy, but its valuation is a hold. When you go over here to valuation, the key point is the PEG ratio. They're trading at 1 versus 1.91 sector median. That's 45% below. Yes, the PE is expensive. Yes, all of the price to sales, everything is expensive except for the growth. So if they continue to grow, I think you'll be fine in this one. I am not getting out of this one. I am sitting in it. Do you want to buy it at 160? It's got confirmation. Again, AMD, it is going to be the first major chip company to report, because NVIDIA, I think it's May 12th, somewhere around there that NVIDIA reports. But this is going to be the first major chip. Intel, I don't consider them major. NXPI, it's autos. This is going to be the first major one. And Chris is saying AMD is sitting on surplus inventory. I don't know if they have surplus inventory, then we're going to be screwed on this. But if they've gotten rid of that inventory, you're going to see this one back up to 200. So I am long-term on this one. I am not short-term. So if you want to play the MACD, you can play that one. I am long-term. You can see we've got some weakness. The other times weakness, when you even got near this 50-day, it was buying opportunity. So I like this stock. I really do. I think it's a good one. I think it's a good one to take a look at it. Supermicro reports tonight. Quarterly earnings tonight after the market. Earnings per share estimates, $5.25. Sales estimate, $3.9 billion. Currently pricing about a 14% move. I am big in this one. I own a bunch of this one. I think I just bought it at $830 2 days ago. It's at $890 right now. It trades like nothing. I mean, this trades like DJT, like a meme stock. I expect this one to blow it away. Will it? I don't know. I mean, your guess is as good as mine. If we go down to SMCI, there's SMCI. If we go down to SMCI and we look, you can see that 559 reported was the 584 estimate is above the 559 reported last time. So they've got to continue to grow. The 3.99 billion is above what they reported last time. You can read the full analysis here. But Supermicro, I think it's a good one. I think there's an opportunity. If you want to read about what they're expected, focus on Q4 ramp market share. That's what they're looking at. I own this one and I own Dell. They are the two in information technology that the quant says are strong buys. Those are the two. SMCI, again, I bought it at $830. I bought it at $1,000. I'm still sitting on the $1,000 price that I paid. Should have had a 5% stop loss on that one. I didn't. It quickly went through that. I said, I'm okay. And then it just lost it. And I should have gotten out before with that 4 or 5% loss. I didn't, but I did double up at $830. So I think my average purchase price is somewhere around $900 between everything that I purchased. Now, that's just in my retirement account. I hold a bunch that I added in July, August, September, October of last year. That's sitting about $250. So I think that's what it's about. And I have a bunch of that, but I'm waiting for long-term capital gains. Again, you have to have a strategy. Make sure you have a strategy around stuff. And the big one tonight is Amazon. Amazon is the Q1 preview of this one. All eyes are on AWS, growth, and generative AI. I would argue that Amazon's earnings will be blown out and they will show good ad revenue. If you haven't watched an Amazon Prime movie of late, they are now showing commercials. And that ad revenue boosted. Look at the YouTube ad revenue from Google. That's what made it pop 10%. And we talked about Goldman Sachs thinking that Amazon is going to blow past this 188. Now, why do I have that 188 up there? The reason I have 188 up there is it's the all-time high. and it's hit it here in July of 2021. And then it ran up there in November 2021. Couldn't get through it. And then earlier in April, we hit it and we pulled back to the 160s. And you're seeing the MACD super high. You're seeing the RSI coming off of levels 76, overbought. It's at 65 right now. That's on the weekly. Now, the 4-hour, you're seeing, I think we had a buy-in yesterday at 182, 182.75. You're trading at 181. Goldman Sachs earlier last week said that they expect this to blow it out. I completely agree. I think Amazon blows it out. So there's your earnings preview for tonight. Again, you have 3 good ones: Amazon, SMCI, and AMD. We'll go over Starbucks because that's a social request. But one that I wanted to point out is Mullen. Remember, this is a meme stock. This is one of the crazy ones that you can trade. You can do what you want with this. It is a stock that I don't suggest you purchase. But if you do, Joe, one of the listeners, texted me last night. He goes, hey, did you see Mullen? Because Joe likes using the 65-day algo in this one. And the 65-day algo this is a 65-minute algorithm. So every candle, the reason it's 65 minutes is if you break a trading day from 9:30 to 4 o'clock, it gets you 7 perfect candles. And what this one does is it plays off the 8-day EMA. And so it got you in here at $3.90. Yesterday at 10:30. Boy, you're sitting pretty on that one because you've gone all the way up to $6.80. And the candles are still moving higher. So that $3.80, let's see. If you had put, say you'd put $500 into this, you're up 72%. You just paid in one day and 1 hour, you paid for your Trendspider subscription. You paid for your Trendspider subscription in just using the 65-minute algorithm on this one. You paid for your Trendspider subscription with $500, a $500 quote unquote bet. So it is, look at this one. I mean, I want to point out that the volume. So see, there's no candles here, none whatsoever. And then all of a sudden, here on April 24th, you have a big candle. You have a 27% move. You opened at 282. You closed at 359. And then you came back down. And there was no volume. And then all of a sudden, the volume started up. Volume creates volatility. But MULN, it's one that, hey, it's a meme stock. You can trade it on. I wouldn't trade it on the 4-hour. I would trade it on a very short time frame. 65-minute is okay. I would even go to a 5-minute and trade it. But I did want to bring that one up since Joe kind of pounded the table and he was like, hey, I've done well. I guess he said he was out cutting his lawn or something and he forgot about it. And he was like, he came back in. Wow. Nick from Spotify wants me to look at Starbucks. Starbucks SBUX. Now my dad has this one. I think I may have gotten out of at 100, and I've said it before. This $100 right here. We're gonna get rid of that line. Let me get rid of this line on this chart. I guess that's on the weekly because we pointed out on the weekly that this was in a range. It broke down below this range. So do you want to get into this one? They have earnings tonight. Let's go over to Earnings Hub and let's look at Starbucks tonight because what are they expected to do? And this is what you want to do. Last time they missed by 4% and they reported 90 cents per share. This time they're expected 74 cents per share. Reported last time $9.4 billion. Their estimate $8.5 billion. You can read the AI summary. There's problems in China. There's problems with Starbucks stores. They're just not doing as well as they were. I mean, if you drink Starbucks every day, you should absolutely own this stock. I would say that you go back a few years, 2 years, and this is the trading range. And I do think that you have 100 in this stock at some point in time. You can take a look. If I just put 100 right there, if you put 100, it's within the middle of this range. Right now, you have no confirmation in this one. If we go and we look at Starbucks here in Seeking Alpha, I think it's a hold, if I'm not mistaken. Yeah, it's a hold, and it's the valuation. And their growth, again, the momentum isn't there. Profitability is an A+. You can look at the PEG. They're trading 50, the forward, they're trading 3% below. So their growth is a B. Their growth is a B because they're growing by 11%. You can see all of that stuff. The momentum is where you really want to look at it. It just doesn't have very good momentum. Is a tough force to break. And when you go and look at revisions from the analysts, you can see 30 revisions down, 27 down. Now, when you take that with momentum, it's a stock that you may not want to get in front of. And you may want to take a look after earnings. If they report good earnings, the algorithm here, it loses you 2%. So it's not horrible. But the algorithm on this one with the 4 hour, it got you in at 85. You're trading at 87, but you're seeing some weakness. And what specifically, you're seeing this down here. And this down here, that downward movement. Remove this horizontal line. Okay. And where is that one? Is that on the daily? I have to look at where that is. And on 5 minute? No. I don't know where that line comes in at. But on the 4 hour, I would look. It's got some high RSI, not super high. RSI is at 49. The MACD is just kind of fluttering. I would wait for the earnings. I would trade it. I wouldn't necessarily own it yet. I would trade it. Sam from Facebook, what's your opinion of AMZP? AMZP. This is this is one of those dividend yielders. AMZP. Let's see if it's a dividend strategy, premium dividend strategy. So I don't have an opinion. If you want to trade it, I think you're okay. It's an ETF, exchange traded fund, launched and managed by Curve. The fund is co-managed, blah, blah, blah. It just provides you, you can see the S&P return. This one, it hasn't been out very long. In 1 month, you're down 0.83%. Let's just look at, this is what you want to do, Sam. Go to Seeking Alpha and you select symbols. You look AMZP and then you look at Amazon. And this is for people who want income. It's a yield strategy. And we're going to select metrics and we're going to go to performance and we're going to go to total return. And so when you look at total return, what's it doing over 1 year? What's it doing year to date? Against Amazon. Why would you want to own this? This is total. This is including their payout. I don't know why you'd want to own this one instead of Amazon. Again, a lot of these don't make sense unless you need income, and it doesn't protect your capital. So be careful with a lot of these. I don't like them at all. I've talked about it enough. I just don't like them at all. Okay, scans. First one is Devon. I was writing down when I was doing the scans. I was writing down going into earnings with strength because it does have strength. You can see that yellow line right there is $50, and that $50 is where I've said, hey. If you've got, you want to buy it below this and you want to sell it above it. 53.15 is where it got you in. Now you're getting into earnings. So far, energy earnings have been a little bit iffy if we've run in with strength. Now this one got you out with a nice 23% gain. The algorithm loses you 19%. So I would not trust the algorithm unless you want to get in. And my theory on this is just get in below 50. So here at 53, I would say no. And the other thing that Chris points out is this rejects off of 54 quite a bit. And so if you look at this and we put in 54, let's put in 54 right here. That's 53.90. But if we look at that and we just move this over, 53.90 right there. Look at how it rejects off there. And Chris is right. Until you get that, I don't think you take the chance before the earnings. And this channel that you've kind of traded in, I've said it. This channel has the stock trade closer to $200, 200-day, as it's trading under its 200-day for years. Energy has just not been a love sector in the past, so old support turns to new resistance. So again, this 200-day has provided support, and we're finally moving positive, but the 50-day is still moving negative. So I'd be a little bit careful of that one. There were a couple of others, like Deere. Deer got a cross up, and Deer is one that we've been seeing trade kind of in this just range for 2-3 years. It's been in this range. Got a cross up here at 401. Their earnings aren't until May 16th. It's a little bit overvalued, I would say, but take a look at the range. Again, if you're going to go up to this range of 450 and you got a 10% upside on it, and you're just kind of in the middle of this range, doesn't seem like a bad entry. So a couple of scans. Okay, I am off tomorrow and Thursday and Friday. So if you have any questions, you can hit me up. The Linktree has all of the social media stuff. It has my email address. Remember, Trendspider, you're saving $1,000 off of it. I will email you back with all of the links to import my 4-hour algorithm, the 65-minute algorithm, all of the watch lists that I use to scan, and all of the scanners. So you can set yourself up during the day while I'm gone. Seeking Alpha, you guys see how much I use the quant and how much I love that the valuation stuff. It's $189 with my coupon, $50 off. It is a fantastic community. I really, really like it. It has a free 7-day trial. And then Alpha Picks, we're coming up. Tomorrow is May 1st, so you get a new Alpha Pick. I won't promote it, but if you want to know what it is, you can go $449. And the reason it's $449, look at this return, 116% versus 33% on the S&P. So, most recent one that we got on the 15th was GCT. I bought this one, I think at 32, 33. It's at 31.46. Provides you a nice little, opportunity to buy where they bought it. It's come back down. We had a nice 13% gain in here. Had I been watching this one, I would have bought it. But remember, Alpha Picks is more long-term buy and hold. So what am I doing as it breaks down here? I'm going to buy more. I like this one. So I really, really like this stock. If you want to read about it, you can go over here to Seeking Alpha. Again, click on my coupon because you save $50. But you can read Alpha Pick Selection, bulk up your stock portfolio. You can read all of these analysts. You can look at the portfolio. You can look at the performance over time. You can read about. And how do you do this? There's 3 main ways they say. Buy at least 5 of them. Buy the entire portfolio. Use Alpha Picks as an idea generation. And that's what I did to buy GCT. I liked it. So I bought it. So if you have any questions, hit me up. I will see you guys Monday. And there will be newsletters. When I can do them, there will be newsletters. So sign up for the free newsletter. And you'll get all my notes during the day. You'll get everything. Okay. Take care. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.